Live.
Happy Friday. It's not actually Friday, it's Wednesday. Why do I say Friday? Because we're doing our buy, sell, hold Miami. We're doing our podcast on Wednesday because Friday will be 4th of July. And as a result of that, we are going to take off. We're going to be celebrating Independence Day under our great leader. We're very fortunate to be in this country with all this freedom that we have. So we figured we would take some freedom and go ahead and do this podcast a little bit early. We're going to be talking about six stories that have occurred in the last 6 weeks. We're going to try to give you some straight talk, try to give you some insight as to what's going on in the marketplace. I'm actually leading the beginning of this podcast because we're going live on Substack as well as other places, but Substack tends to go a little bit faster. So all that being said, let me go ahead and turn over the floor to our host, my partner in this podcast. Remember, buy, sell, hold Miami, Daniel Hernandez, Compass Real Estate. He's an expert in South Florida. He knows residential real estate. He's a guy who gets into the trenches and he grinds it out. I'm more of a macro guy sitting back, sort of scratching my graying type of, I don't even know if you
It
call it
looks
a
good
goatee
though.
or so. That's why I have everything white, so it doesn't necessarily stand out. That's why I don't want to wear anything with color. Because if I wear color, Daniel, it's going to make me look like, a
No,
little bit older than I am.
you'll just look like an older guy who's trying to be young. But that's very popular amongst the Miami Beach jet set.
I was in India. I don't know if you've ever been there, but when you go to India, it's the weirdest thing. You walk around and everybody's got like orange hair, like it really
Because yeah,
weird.
they
Everything
all
is like
put
orange.
coloring in the hair, and with the sun, it turns orange.
Yeah, exactly. So they think that by putting this orange or whatever in their hair, they're going to make them look younger. If anything, they all just like stand out. It's almost like a land of like the opposite of the Smurfs. The Smurfs are like that Miami Dolphin blue.
You look like Oompa Loompa.
Exactly. So no, I'm not dyeing anything. It's a little bit gray. So what I do is I shave it more so than try to mess around with any of these dyes. And good news. If you are bringing in dyes from Vietnam, we're only going to have 20% tariffs thanks to the
Big
Liberation Day.
deal. Holy
Yeah,
shit. Wow, that's
yeah, yeah, yeah,
amazing that he
yeah.
was able to do that.
It was announced today that there's supposedly a deal with Vietnam and the United States as part of this whole Liberation Day. Keeping in mind next week is when the deadline on the pause for every country except China kicks in. So only in Vietnam is it going to be 9%, 20%, unless it's transshipped via China. So it goes from China into Vietnam and ultimately the United States. Then they're going to hit it with 40%, according to press reports. But let's see when that deal's actually inked. Remember, 90 deals in 90 days. And this effectively is a second deal in about 80 something days. So, Daniel, the floor is yours.
So, speaking about deals, we got a lot in the rundown today. We got good deals, bad deals, deals that should have happened that haven't happened, and deals that were supposed to probably happen a decade ago that might actually come to fruition. We have it all lined up. Our format, if you've never watched it before, you'll see the rundown down below. Peter, it might be to your left. But we got 7 minutes. After 7 minutes, we go into overtime. And after every category, we're going to say, are we buying it? Are we selling it? Or are we holding it? And then after about an hour, you will be more educated than you are right now. Maybe you can say something sort of smart at your 4th of July barbecue. We hope we can help. So let's jump straight into it. Peter, you sent me an article that refinancing is hot again, but they didn't cut interest rates at the Fed. What's going on?
No, so and I should pull up the 10-year Treasury. Anybody who doesn't know, if you want to know what's going on with interest rates, you basically take the 10-year Treasury rate, you add 3 points to it. That's going to give you your mortgage rate. So what's happening right now is we're on the brink of passing this big beautiful bill, and as a result of the big beautiful bill passing, we could be adding a minimum of $3 trillion to our deficit, and as a result of the deficit going up, we're basically going to be a higher risk because we got too much debt out there and we don't necessarily have a way to pay for it because we have to give big tax cuts to our billionaires, make sure the billionaires can kind of pull us all along and allow
That's
us to
trickle down
survive.
economics, Peter.
Oh, trickle down economics, 100%. So I'm looking at 10-year Treasury right now coming in at 4.29 or so. Add 3 points to it. That will give you your mortgage rate, generally speaking. People with great interest, with great credit scores, they're going to pay less. People with worse credit scores are going to pay more. But generally looking at 7.3%. So why is everybody rushing in to try to go ahead and refinance, try to get a mortgage? Because they're afraid of what's coming down the pike. They're
I think it's
afraid
going to
that
go up.
as we go forward, It's only going up. I mean, think about it. If a buddy of yours comes up to you, Daniel, and says, "Hey, listen, can you spot me $100?" You're gonna say, "Yeah, no problem," because you have an experience with him. But if a different buddy who's been banging you every few years for cash is real slow to pay, you're gonna say, "I don't know if I'm gonna do it. If I am gonna do it, I'm gonna need some kind of vig." Well, that's what we're becoming here in the United States. Remember, Moody's downgraded us our credit rating. And chances are going forward, it's become much more difficult. So I think a lot of people are trying to front run the market, anticipating what's going to be coming because of everything that's involved with this new economic strategy, including the big tax cuts for the Jeff Bezos of the world. And as a result, I think they're trying to front run it. So that would be my take on it. Right now, mortgage rates call it 7.3% or so ballpark. What do industry watchers say you need to jumpstart housing? Needs a 5 handle. Right now it's a 7 handle. So just sort of take that into consideration. And if you want to work it backwards in order to get to a 5 handle, what does the 10-year treasury need to be? Needs to start
2%.
with a 2 handle. That's right. That's right. So we're a long way away. And you say, well, yeah, but who cares? Everybody's buying cash, yada, yada, yada. Yeah, but everything else around it goes up and up and up. And if you do go buy into a condo, which is what I specialize in, some people start falling behind. All of a sudden, that leads to potentially a doom loop where people get foreclosed. They don't pay their their maintenance fees. It's just a whole bunch of uncertainty. And Daniel, just to top it all off, ADP, which is a company that does payrolls for employers. Expectations were today we were going to have 100,000 new private sector jobs that were added. You know how many we added, Daniel? Take a guess.
33,000, right? They cut 33,000. That's what I said.
33,000 job loss versus 100,000 job gain. So we have a bunch of great things going on. Well, I think what's happening is people are in a recession mindset. They're fearful of what's coming on the pike. They don't want to necessarily burn cash. And if you're an employer, a private sector a private company, and you're looking at hiring people, do you really want to hire somebody if you don't really know what these Liberation Day is going to do? Remember, 90 deals in 90 days. That's what was announced back in April after the market went crazy after the April 2nd Liberation Day announcement by our glorious leader, President Trump. And what happened? We got a deal with the UK, supposedly. Even though if you listen to the Prime Minister of the UK, a journalist asked him at the signing, remember he was on a conference call. They sent in the ambassador to the Oval Office to sort of talk about this great deal. And the journalist asked them, were you anticipating? He goes, no, I was supposed to be watching a soccer match. Next thing you know, I got to get on this damn call because of this announcement that suddenly we've reached this great deal. And now Vietnam has come forward. And, by the way, Daniel, I'm not a technology expert, but what I will tell you is, though, as part of moving away from China with manufacturing, companies like Apple, who have gone into, they're going into India, but they're also going into Vietnam. It seems like wherever Apple goes, they get screwed because right before Liberation Day, the tariffs are starting kicking in. Remember, there were stories out there about Apple having to lease out these big planes, fill them up with iPhones and all this stuff, and fly that stuff in. Exactly. And then he puts a pause on it or he carves out. So, this is the uncertainty I think that's causing a lot of people to sort of sit on the sidelines. And this is why I think private sector, do you really want to take on new employees? Do you really want to go through that process, or would you rather tighten the belt and ask everybody to do more with less, especially if you don't know what your sales are going to be?
That's interesting. I wonder from a real estate development perspective, do you have developers just filling up warehouses, much like Apple with the iPhones? Are they filling up warehouses with aluminum railing? Are they filling up warehouses with glass?
Well, I can tell you, related group was notorious for doing that. Related would go ahead, and if they knew they were doing a bunch of projects, they would go and buy in bulk, and they would actually acquire elevators and but more like the real big, like elevators, stuff like that. When Carlos Rosas ran Related before he got pushed out and the kids took over, George Perez's kids took over. I don't know what happened there, but when Carlos is running it, he's doing the Standard right now over in Midtown, and he's involved with that big project on the old Walmart site, potential Walmart site in Midtown. So at the time they saw the advantage. This was even before tariffs were an issue, but they saw if you bought in bulk, like when you go to Costco versus going to like CVS, which by the way, CVS, I absolutely hate CVS. Every time I go in there, why do you have carpeting in a pharmacy or a drugstore or a market in South Florida? Nobody has carpeting It should be tile. So I refuse to go to CVS because it's always got the carpeting. Have you ever
Well,
noticed that,
now
Daniel?
I was told that now there in South Florida there is no reason to have carpeting. Carpeting used to be the yes, I get it in the Northeast because your floors are cold and 10 months out of the year, but it was a more economical solution than tile or wood. Now with these vinyl and laminate floorings, they've undercut the carpeting. So anybody who puts carpet in South Florida, it's it's like people who pour their milk before they pour the cereal. There's something wrong with you.
Well, I will tell you, I did a lot of travel. So when I used to eat cereal when I was traveling, living out of a backpack, I would eat it with water. So I'm a little bit of an outlier.
You're kind of a sicko then you fall into that camp.
But talking about the carpeting, I did a bulk deal during a Great Recession, and the bulk deal buyer had no intention of holding on to these units. They were simply looking to rent them out in the meantime so they could retrade them, and they opted to put in carpeting because carpeting was cheap, and whoever you sold it to, that person could simply pull out the carpeting and put in whatever kind of flooring they want. So it actually became a sales approach. So it was kind of like they were able to play both sides of the market.
Right.
So
If
yeah,
you don't like the tile, you're like, shit, I don't want to rip
yep,
up this $30,000 with the tile to put
correct,
whatever I want. Carpeting, get it.
exactly.
All right. Next topic, HB 913. Before we get there, so refinancing. If you own property right now, yeah, I'm refinancing. I'm buying it.
Lever it up, man. Lever it up. I would say if you own property and if you feel as if your place is appreciated tremendously, I put a lot of debt on it because if stuff goes sideways, bank doesn't want it back. They'll slow walk to take it back from you, and all that supposed equity that you have, it could disappear pretty quickly, especially if we start to see any kind of decrease in pricing, which I think is something we're going to be talking about. So yeah, there might be a couple of reasons to go forward in financing. So I would be a buy too if you're considering financing. One, because rates are probably going to go higher, and two, if you're concerned that your equity is going to get blown out with all the adjustments that are occurring, why not pull the equity out today? And lo and behold, if stuff goes sideways, let the bank deal with it.
Yeah, I mean, and before we jump to the next topic, if you bought in the last, let's call it 18 months, there's a pretty good chance that you got a mortgage that was over 7.5%.
Yep, probably. Yeah, yeah.
So if you can refi now with awesome credit at 6%, that actually might not be awful for you. I mean, minus mortgage origination fees, et cetera, et cetera.
Yep.
But I think I think your head's in the right place. We've been floating between 6.6, 6.8, 7 a few months ago. All this uncertainty, and you've been saying it for months. The summer analysis by paralysis. I think it's stop time to stop being paralyzed, and people really need to start focusing on what the next 3 to 6 to 9 months are going to look like in your finances. And oftentimes, your home, that's the biggest slice of your net worth pie. So that mortgage note represents a significant amount of your wealth.
Well, and in kind of to that point though, so this is the part that I haven't seen analyzed thus far. So we just ended the second quarter. We're now in the third quarter. The quarters go, it's calendar year. It's January through March, then it's April through June. So in the first quarter, we contracted the U.S. economy. And second quarter numbers should be coming out at the end of the month, the end of July. So if we have two consecutive quarters of contraction in the economy, we're in a definition of a recession. There's some body that has to decide if it's full-fledged recession or not. But typically, when you go into a recession, you start to see interest rates come down because everybody's slowing down. They make money more readily available to try to curb it. What are they going to do this time? Are they going to be able to? I mean, how do you cut interest rates? Thanks to the big, beautiful bill that looks like it's going to get passed. How do you cut interest rates when the debt is simply growing and there's no real plan other than cutting healthcare and other stuff to kind of cover the debt service?
Well, what's the deficit at? $30 trillion. The interest payments alone on the national deficit will be the largest expense to the American government. Forget the
Yep,
military, forget NASA. Well, they forgot about NASA 50 years ago, but
yep.
forget all their other expenditures. The servicing of national debt is the single largest expense to the American public,
And it's only going to get larger and
and
larger
it's
because
only
we,
going to
as
get
we
larger.
all
There's no
know,
plan.
Yeah,
But you know who
yeah.
did have a plan? You know who had a plan, and she saw it through. And you can say what you want about her. I certainly do. But in terms of her constituents, Vicky Lopez got this condo relief bill passed through the House in Tallahassee,
Yep.
and she put it in front of Fat Fingers' desk, and he signed it. And now we have HB 913. It's a condo relief bill. Big deal. Why is it a big deal? I highlighted 5 things. Uh, First off, the deadline's extended for the reserve studies. What does that mean? That means that back in December, that was the due date, right? For all of these condos after the Surfside collapse 2 summers ago, they just had the second year anniversary. Anniversary, it sounds awful. It was a bad thing. It's a
But no,
tragedy.
4 year
Oh,
anniversary.
4 years. No, it's not 2 years. It's a two. Yeah, I'm getting my numbers mixed up. So
Yeah.
4 years ago, and they had until December 31st, 2024 to get their structural integrity reserve studies that all these condo owners had to submit, say, we're going to collect these reserves. Awesome. So many buildings failed this or just blew it off entirely that Tallahassee said, well, shit, how are we going to enforce this? What, we're going to tell the municipalities to turn their electricity off, to turn their water off? No, that's a public relations nightmare. Are we going to tell, I mean, what they've settled on is if you do not meet this new deadline, which is now December 31st, 2025, the buildings will be ineligible for citizens, which is huge. I don't think enough people realize how bad that could be if Florida has to start playing bad cop come 2026 when buildings continue to fail or not submit their structural integrity reserve studies, when all these private insurers say, dude, you are uninsurable. So that's one. And then if you have a building that's uninsurable, you can't transact in it. They're already having enough problems transacting because of high rent to owner ratios, because of reserves, because of a multitude of reasons. So if they don't do this and Citizen says, Basa Magula, bad. So that's one thing. Second thing, which I think is very consequential, the funding pause. So if you were one of these buildings who blew it off or failed, do your structural integrity reserve study now, because now you don't have to start collecting. You don't have to do all these special assessments right away. You should, but you don't have to. And you've talked about this in the last few weeks. This pushes our condo redevelopment timeline out by 2 years. So now you do the structural integrity reserve study and you don't have to collect the money right away. You get a 2-year pause on those collections. So the HOA boards can go and beat each other up and say, no, I don't want to pay $1,100 a month. I'd rather pay $900 a month. And they can go bicker and back and forth for another 2 years. But it quite literally is the definition of kicking the can. 3, flexible financing. I think the bankers are loving this. Anybody who can
Oh,
actually
hell yeah.
underwrite it. But I mean, it's a very difficult thing to underwrite, right? I mean, how do you?
No. Well, I spoke to some bankers just real quickly. You can underwrite it, and the way they're going to underwrite it is they're going to shift the burden on behalf of the licensed architect and licensed engineer who's going to be signing off on these reports. So these architects and engineers not only going to face civil liability, but there could be criminal liability. So as a result of that, this is how the banks are going to underwrite it. They're going to say, okay, these are the experts. This is what they say. If they're saying that, we're going to go ahead and lend against the signed structural integrity reserve study and or milestone. So the banks feel as if they got nothing on it. They're covered.
A banker I was talking to said that what they were doing, and this was a few months ago, maybe their formulas have changed.
Yeah, possibly.
That they would finance if the assessment was within 25% of the monthly maintenance fee. So if you make the math easy.
No, yeah, that sounds about ballpark. Yeah,
so if your maintenance fee is $1,000 a month and the special assessment comes in at $250 a month for the next, 6 years, call it, they'll do it. But if that assessment comes in at a higher ratio, the bank's going to say too risky, because again, that's just for this year. What happens next year when all of a sudden Citizens or one of these private insurers go to the building and say, hey, we're bumping your insurance by 50%, because now that HOA fee, that monthly HOA fee, isn't $1,000 a month, it's $1,500 a month. which is significantly more, right? I don't know. Very difficult
Yeah,
to
yeah, but
underwrite.
I think here's the secret sauce, my opinion. Secret sauce is the financing is not going to come from a bank. It's going to come from a hard money lender. In other words,
Oof.
private equity or hedge funds. They're going to come in. Why? Because when a bank, the way the bankers explained to me, when you go ahead and provide one of these loans, you're not leaning each individual unit within the building. You are leaning the ability
The whole
to
building.
basically collect maintenance fees. And if the association stops paying, the bank will then move to pull, in my words, a coup d'etat, blow out the whole board, put in place their own board members, and those board members most likely would vote to terminate. Terminate is when you basically rip up the condominium declaration, 300 pages, you rip it up, and the building where you have individual owners, it reverts back to one owner and effectively a rental tower. See, so that's the thing to watch. This is a movement to, my opinion, to push it towards private sector providing the financing, because some of it will not meet bank regulations in terms of audits and what the Federal Reserve said, or the OCC or whoever. And that's the part I would watch. This is a loan to own type of play, just like you do in residential on a smaller basis. This would give you the ability basically to finance a building. Association stops paying, they can't pay. Lo and behold, a private equity group or hedge fund ends up with it. They terminate it. Now you're in the land trading business,
So
oceanfront land trading
so
business.
is is your oracle, the oracle of Peter Zalewski, saying that in 2 years, and let's not say 3 years, let's give it 3 years, that the condo terminations will actually increase because of
Yeah,
this?
well, yeah, I think it will, because I mean, think about it. Okay, so Daniel, let's say one of your customers got the hands on. I mean, what are the houses you sell, the condos you sell? 2 million, 5 million, whatever. I don't know. Pick a number.
Let's call it a million and make the math easy.
Okay, so one of your customers is chasing $1 million. Well, your customers over leveraged. They got a bunch of stuff. They own properties everywhere. Blah 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 blah. So they go ahead and they try to get a mortgage. They go to a bank or they go to a mortgage broker, and the mortgage broker shops it around. They go to the traditionals. They go to maybe a credit union, or maybe they go to a bank, and then they're also going to shop it for private money. And as they're shopping it, and based on the exposure that your well-heeled customer has, they want to buy this $1 million, but they got other stuff. A lot of banks are going to say simply it doesn't meet our requirement, and if you do want to go ahead and you want us to finance it, we're going to have to portfolio it somehow, some way. You're going to need to put money in a CD, this and that. So that'll lead many of them to go to let's call them risk takers, these private equity groups that are going to charge a hell of a vig in order to give you the deal, and then they're going to want prepayment penalties, they're going to want this, they're going to want that. This, I think, will be a movement where who will be waiting to save the day with their arms wide open? It's going to be private equity and hedge funds. And that's where many of these associations will probably end up. They might not end up immediately, but as time goes by and as these banks get tapped out on how much money they can put on the street, you're going to need an alternative supplier.
Yeah, but I mean,
This would be a great
with
spot.
interest rates the way they're going, what are we talking about? An 11% loan, 12% loan?
Well, I was told by the lenders, I know that it will be comparable to a mortgage.
It'll be
Now,
comparable to a mortgage.
yeah, that's
Well,
that's
because it's
normal.
collateralized by a oceanfront property.
Well, the ability to effectively collect money from individual unit owners, yeah, yeah, yeah. So the right to collect the money under the association is really the collateral. It's not the individual units.
Got it.
So it's
Got it.
just it's just the bank doesn't want. I mean, put it this way: the bank learned, generally speaking, they learned during the Great Recession. You don't want to take condos back. So when George Perez's related group called everybody into downtown Miami, the legendary story in the Miami Herald had boxes of keys brought in and slid them over to all the different lenders, saying, "Listen, dude, we're out. You want them? Here they are. We'll give you a deed in lieu. You take it back." That's another one of our illustrious leaders. So when he overbuilt and the market went sideways and they had to give back the keys, the banks were like, a lot of the banks were like, dude, we don't want anything. Like Icon Brickell was at HSBC on 2 of the 3 towers. They're like, dude, this is the last thing we wanted to be managing, 800 or 1,200 condos. No, you kind of handle it. And I think this is a way they'll structure it in such a way where the bank simply has the right, or the lender has the right. And meanwhile, they don't need to take over all this dirt. Last thing you want to do is fix up some old ass building where they're now on the hook to pay for everything. So I think that's why they're carving it out, or they will carve it out in such a way where it's the rights rather than the actual physical, the rebar and the
So,
cracked
so,
cement.
so what I'm hearing is that the terminations will happen, but
Yes, 100%.
it'll happen in a different way. Right
Correct.
now, it's happening that
One-offs.
Michael Stern and Terra, David Martin, and Two Roads Development, they're going in and they're bringing coffee and empanadas to the board, saying, "Hey, you want $1 million? We'll give
Yeah.
it to you." And they're sweet talking to make all these transactions. What I'm hearing from you is they're going to make these condo owners, these associations are going to make, I'm not going to, let's just say deals with the devil. I don't really mean that, but that's kind of
Yeah,
what it
and I
is.
mean they're hard. They're going to be hard money guys. It's a
Uh,
loan to own. We're giving you a loan, and we expect we're going to own it because you're going to go bad. Loan to own, hard money.
right. It's just going to take time.
Yeah, well,
That's,
it's going to take time, but this is where the 2 year extension comes in. Because remember, we were calling we were saying we don't get through the other side of this mess till 2031. Now with this 2 year extension, which by the way, Vicky Lopez did not want. This is something that was pushed more so on the Senate side. It was also something that Governor DeSantis was sort of he was angling towards to kind of help all the people on fixed incomes and others who were complaining about it. So it simply delays it or extends it. So I don't think we come to the other side till 2033, which would mean it'll be a 12-year process from the moment that the tragedy occurred where 98 people died in Surfside right there on 87 Terrace in Collins to the point where we will come out in a market that's completely understood and will be tradable without actually going into the units. You'll simply be able to trade them because all the underwriting, all the understanding, all the analysis will be done, and it'll be like booking a flight where you pick your seat, you pick this, that's where we're going.
that's where we're going.
Yeah, yeah, no,
Bef-
and this will jumpstart it because Silicon Valley makes technology, South Florida makes condos, and
right.
everything that happens here it spreads. All of our rules, a lot of our rules are being adopted by other states across the country. As far as Hawaii, they're adopting some of the stuff that we're putting in place here. So we really are we're the laboratory. This is where the R&D gets done, and then it'll spread nationwide. And now take it out to where we're going to be. You're going to be trading condos, I would anticipate, online.
No, you're always going to need a realtor. It's a people driven business,
Oh no,
Peter.
no, I'm not saying you won't need a realtor, but you will be able to trade. It's going to be the type of stuff where you'll be trading it. So these ultimately will move towards what I've been, saying for
Oh,
decades, commodities.
you're securitizing condominiums.
I mean, that's where it's going. It's inevitable. I don't see how it doesn't, unless we get somebody in. If our great leader, once his term is over, maybe we get somebody in who kind of reverses it. Remember, there was a movement by the Democrats at one point to try to limit or outlaw or prohibit or tax the hell out of these REITs that were buying single family houses, the invitation homes of the world, where they go ahead and they buy a bunch of houses and then they turn around and rent them out. There was a movement to try to calm that or quash that. So unless something like that happens, if it goes on the way it's going, yeah, this stuff's going to be traded just like I would say salty snacks, gasoline, or orange juice.
Well, speaking of condo trading, next topic.
Yeah, Daniel, if I could before we go on.
Tell
So
me.
so that 913, it's 92 pages long. It's a PDF legislature put out, everything that's signed off on. What we did is we spent last week, we scraped it all and we created a series of 7 videos, 7 1 hour videos. So
You made
if you're
7
gardening,
videos?
yeah, if you're gardening, if you're cooking, if you're sick of your boss, anything like that, you can pop the AirPods on. You can listen to the entire law. So you'll hear an AI generated version of my voice, but basically 7 hours. You can hear the actual legislation. You can, we put captions in there if you want to watch it or not. But I would encourage anybody, if you are in the condo game, give it a listen. It might spark some interest. So rather than relying on people like myself and Daniel or anybody else to try to tell you what's going on with the law. Attorneys $1,000 an hour, or whatever. Read the damn thing yourself, and if you don't want to read it, because who wants to sit down there and read 92 page, single type? You can watch the video, listen to the video. So we got it up at miamicondo.club. I got it on YouTube. I got it on Spotify. I got it everywhere. So I would just, these are the rules of the road for next year in Florida as it pertains to condos. A lot of the stuff will be spelled out.
The last two highlights from it before we hit the next topic.
Yep.
Number four, interest rates on reserves, which sort of seems like a no brainer to me. You're collecting these reserves. Easy back in the napkin math is you do your structural integrity reserve study. You got this little building, and they say over the next 10 years, this is what it's going to cost you to replace your roof, your balconies, your impact windows. It's going to cost $500,000. For the structural integrity reserve, you need to maintain at least 10%. You should probably have more than that, but it needs to be at least 10%. So you're going to have an account where you put all this money. Previously, it just had to sit there, sort of like a deposit, escrow. Now you can put that into an interest-bearing account. You can buy CDs, which aren't like the little plastic things. I mean, like certificates of deposit, and make a little bit of interest on your money. And for these larger buildings, it's a lot of bit of interest. I mean, it's hundreds of thousands, if not millions of dollars in reserves that can now get interest payments from these gargantuan amounts of money. I mean, how many condominium associations are there in South Florida? 600 and something.
South Florida has 13,000, and all of Florida has 28,250. But as of last year, last time we looked at it.
And in Vicky Lopez's district, it's 600 and something.
Yep, correct.
So that, and then the last thing, and this is sort of like
well, Daniel, on that note, though, I could never imagine a condo board member who's not paid and is serving in a voluntary role. I could never imagine that they would be influenced by maybe a lender or some institution that wanted to collect and hold on to all of these reserves. So I'm sure nothing like that will happen
you're saying
whatsoever.
A condo board president is now like the president of like the Texas Teachers Union, who might be susceptible to some under the table payments. I'm not saying that the head of the Texas Teachers Union is corrupt. It's just the first thing that came to mind. But no, seriously, it's a thing. You bring up a great point. The last thing before we move on to the next topic was just some little tweaks they made to how condo boards operate, or at least should operate in the year of 2025. Like, they're going to put the meeting minutes online. So if you are a pied à terre owner and or an absentee owner who doesn't live here, but you have a significant investment in a building, you can participate in these meetings online. Granted, to be able to do that, they have to vote on it. I think it's like a 25% threshold. But they're going to put meeting minutes online, and it's all about making the experience more transparent, making it seem like you have a voice in this building that you have significant emotional and financial investment in. It's your home. So if you live in France half the year, you should still have a say of, whether or not we can put barbecues in the balconies or whatever. If we're going to fire the valet company, if we're going to take on a tenant as a strip club in the retail bay in our lobby. These are all things that come up that I feel previously too few people had a control over. And these buildings, these complexes are only getting larger, it seems. We're talking 300 units, 400 units, 500 units, 800 units. And a board is just a select few of people who make very, very impactful decisions on your home. So all of these transparency laws, I'm all for it. I'm for the condo bill. I'm glad it got passed. I think we should have had it passed before 4 years, but you know what? Better late than never. And I'm excited to see how this progresses.
Yeah, and how it progresses is there's not enough staff to enforce anything over with the division of condominiums, timeshares, and mobile homes. So last year, if memory serves me correct, there was enough money budgeted for 65 regulators to be brought on board to oversee, north of 1.2 million units in 28,250 associations. So so at the end of the day, industry is going to drive this, and the regulators will simply respond after the fact. They'll be the ones that come in and write the postscript as to what's happening. So all this is going to be driven by industry. And while a lot of these laws, they're well, and they have great intent. But if you talk to anybody who's on a condo board or anybody who lives in an association, all of them are going to tell you, I complained, I did this, I never heard back from anybody. So that's the problem. It's kind of like Interstate 95 when you're driving and it says 65 miles an hour and you're going 80 and a cop gets on your ass. You move over and the cop buzzes past you without writing you a ticket or anything, even though the speed limit's at 65 and you're going 80 and they're on your ass. That's that's the issue. All of this is, I think it's suggested. Let's see how they can actually enforce it. And I don't think they're going to be able to enforce it. So while this all is going to make us feel great, I don't know if it actually has any teeth, at least based on the conversations I've had. And I used to be on a condo board. I sat on a board for a number of years for the association I was living in. So I think it's a feel good type of thing, but I'm not sure that it's actually going to make a difference. But I think they should put it on the books.
All right, I'm buying it. I think we have to buy it. I think
Yeah, no, you have to.
we
Yeah,
have to
100%.
buy it. I mean,
Yeah.
all right. So next up, condo inventory is up everywhere, but prices not as. Where's your 40%, Peter? I want, my buyers want their 40% discounts, and they're only getting 12.
So here's the thing. This is what I've seen over the course of cycles, and maybe some of you will be able to appreciate it. So what happens is, as the market starts to slow down, as the market starts to evolve, as we move through different phases, you have a bunch of people who are dead set on their place is gold. It's gold. It's gold. It's gold. I'm not going to discount. I'm not going to discount. I'm not going to discount until they discount. The perfect example is during the Great Recession with Lehman Brothers. Once Lehman Brothers went bad, everybody was dumping. So you typically need some sort of black swan moment. You need some symbolic trigger in order to make it all happen. So everybody's standing firm with the stiff upper lip until what's the Mike Tyson quote? Everybody's tough until you get punched in the mouth or something.
Until you get punched in the face. Yeah.
Until you get punched in the face. That's really what it is. You have a lot of people standing firm, and the people who are moving now to get out, they tend to be better quality stuff. And the buyers who are coming in, they're chasing great quality. And if they can get great quality at a discount, they'll pull the trigger. So that's why I would argue numbers still stay high, because it's selective buyers choosing over and above quality product. Once you get punched in the mouth, then you start to see all the rats scamper to try to get off the ship. And that's normally how it goes. So I there's downward pressure. We haven't had the symbolic, we haven't had the black swan, we haven't had the moment where all of a sudden everybody's running for the exits. And once that happens, then you get in your doom loop. So right now the plane is sort of just, it's meandering, and they're trying to keep it up. But there will be something, maybe one of the, the engine blows or the steering, whatever the terminology is. But there'll be a moment that ultimately triggers, the unwinding. So this is to be expected. It always happens like this. And, again, going back to Great Recession days, 2006 was effectively the peak of pricing. We didn't see the free fall in pricing till 09. So it was over 3 years later. And why was it actually triggered? Because of Lehman. So once Lehman went bad, then the whole thing it was rapid fire. So we move with a herd mentality. So everybody's saying it's great, it's great, it's great until it's not. Remember, stairs up, elevator down. That's the way it works.
So, and I got my words mixed up. Last week we were talking about a lot of these federal programs subsidizing paper, subsidizing mortgages that weren't being paid. So officially, they're not in default, right? They're not delinquent loans. But when these programs expire, when these 36 months of late payments expire, and all of a sudden these mortgages are very delinquent, what happens? Is that the Lehman Brothers event that you're talking about? And is it going to happen at a national level? Because I see markets, which, when we're talking about markets, we're talking about Tampa, Austin. We're talking about pins on a map. We're not talking about
Cape Coral.
Yeah, Cape Coral. So we're talking about pins on a map. So there are all these markets that are very distressed. Galveston, Texas, Cape Coral. You sent me the article the other day.
Austin, Texas.
Austin, Texas. There are all these markets that are seeing 10% haircuts across condos, townhouse, single family, you name it. But we haven't seen that across the board nationally, and we haven't seen it here in Miami. We've seen it in certain sub markets like Sunny Isles in the older buildings. I think that's going to extend southward towards Aventura, towards some of these vintage buildings in Miami Beach. But then you talk about the other side of the market, or one of the other sides of that market, and we're still in the same geography, but the $5-10 million plus market is booming. So when does everybody start going to the barber to get the haircut? And
Well,
what's going to cause that?
yeah. So okay. So a black swan is typically something you don't see coming. You could not have anticipated it. It's like I mean, it comes from like an explorer seeing a black swan. Like what? They're supposed to be white. It's like yeah, I never could have imagined that. So I'm not saying it's a black swan, but listen, if we come out with Q2, which just ended last week or this week, I should say. So if the second quarter ended and we contracted and we got 2 consecutive months of contraction, that might be something that's going to push people towards. So it's kind of like a slow burn, and then all of a sudden something comes out of nowhere. It's like a sucker punch from the back, and that just triggers the whole barroom brawl, if you will. So there's going to be something you can't anticipate, you can't expect. It'll shock the market, and when it shocks the market, people will immediately have to recalibrate their forecast and their base case for kind of going forward. What that'll be, nobody knew. Nobody thought Lehman Brothers was going to fail. Nobody thought it at
Could
the
it be
time.
something? Could it be something inhuman like a hurricane? I don't know. I'm just pulling things out of my ass. But
But there's got to be something that really sort of triggers it. I mean, would like I don't know what it can be, but it's got to be something that wasn't anticipated, and all the experts and all the forecasters, they didn't see it coming, and because of that, you have to immediately. I mean, let me give you a perfect example of a good. Wasn't a black swan. I don't know what you call a positive situation,
a
but
gold swan. Let's make it up.
yeah, gold swan. It was like Nvidia. All of a sudden, Nvidia, the company that makes the computer chips, the AI powered computer chips. All of a sudden, they came out a report, and once they did, oh my God, everybody, all the analysts had to adjust their estimates based on what Nvidia was saying for it selling their chips. What you could actually do to it. Oh, you know what it was? It was ChatGPT entering into the grill in Microsoft. That was in October of what 23 or so. Once they did that, all of a sudden, everybody said, okay, the game is on. Who does the chip? Who makes the chips? Who's got the lead? And it was Nvidia. And as a result of that, Nvidia's share price, because every analyst had to rerun their numbers now because the game was on, and because of that, the stock was able to surge out of control. That's an example of, think about it. Maybe you're making whatever. You got a job. You're making 50 grand a year. Now suddenly you get this promotion, or you get you win the lotto. All of a sudden you got to like, okay, now I need to anticipate, what is my retirement plan, what's this, what's that. It's that type of event that changes the entire landscape, and you're forced to recalibrate your base case and everything kind of going forward, and that's what it'll take. Something will have to damage us psychologically, scare the shit out of us, and that's when it triggers. And then once it triggers, dude, everybody dumps. And then you
All
get
right.
the banks, you get it's all interconnected in such a big way. Now who knows, maybe we can navigate in and around this, but what I will tell you is, if you go off the 1% rule, which I love to talk about, you go off the 1% rule and you look at a place like Miami Beach, where the average asking price on a condo is $1.6 million. Daniel, listen, I got this condo I'll sell you in Miami Beach. Average asking price can be $1.6 million. And if you buy it, I will be able to generate ballpark about $3,000 a month for you in rent. That sounds like a great deal, doesn't it?
That sounds like an excellent deal. Can I buy two?
Exactly. Oh, and by the way, the maintenance fee is going to be about $1.50 a square foot per month. And on your $1.6 million condo, we're going to hit you to 2% property tax, which means, you're going to be in for 30 grand, 32 grand divided by 12 months. So even though the rent's a little bit low, it's not going to cover your property tax and your maintenance fee. But don't worry, the market's appreciating. See,
No, no,
so
no, no, no.
that's the
It's
moment.
fine, Peter. It's fine, Peter. The developer I bought this from says I have a 7% guaranteed yield for the first year, and he's going to pay the HOA fees.
See how I worked that segue into the next piece?
I did. So are you buying? Are you buying a condo inventory at price stay the same? What's going on? I mean, and the buy
I
sell
think
hold.
that's a
This is
sell. Yeah,
that's
I
a
think
sell.
for me it's a sell. Yeah, I don't see any reason this summer. I don't see any reason until Labor Day at the soonest to do anything. In May, I called a summer of paralysis by analysis, a summer of wait and see. I don't think you can do a thing till September after Labor Day. One of the reasons is even though we have this Liberation Day pause coming up next week, China doesn't come up till August. So even though Vietnam's cut a deal, China doesn't come up to August. Until China is taken off the board, I don't think you can do anything. And I don't see them doing it before Labor Day. And by the way, the president in this current administration, they're all into like dates. They like certain dates, like everything pegged to this big, beautiful bill, as it's called so fittingly. It had to be done by 4th of July for Independence Day so we could celebrate our great leader. So I would imagine they're probably going to have to try to have something done with the trade deals by in and around Labor Day to, help the working man and woman.
I agree. Let's sell that. Jumping into the next one, which you so elegantly thread said needle. You've gotten the emails. I've gotten the emails. You actually told me about this, and I said, no, it's this project because I've gotten the emails. There's a development project, and I'm sure there are many. There's the ones marketing this very well. So Peter and I are realtors. When we
I'm not. Okay.
You're not.
Yeah.
I'm
not with Miami. Yep.
Okay, he's not with Miami anymore, but he's got his broker's license. So when a client comes with us to a pre-construction sales center, typically, and maybe you knew this, maybe you didn't, but you should know now because of the NAR transparency laws, but typically a developer offers 6% commission in a pre-construction condominium development. So that means that you make your deposit, I get a point then. When they break ground, I get another point or two then. And then when you close, I get the remainder. We get the remainder. What's happening now and what's happened in other points of the downward slope of a cycle is developers have difficult times selling condos because there are fewer buyers, especially in a place like Miami where we saw foreign buyer peak in 2018 at 50%, meaning if you flipped a coin, there was a 50% chance that the buyer was foreign and there was a 50% chance that they were from the US. That number last year, 2024, the latest numbers came in, has dropped to 10%, right? So foreign buyers have always loved to buy pre-construction condos in Miami for a litany of reasons. I have my own thesis about it. I think that you'd be crazy if you lived through the debt crisis in Argentina 25 years ago to put your money in a bank in Argentina. Why do that if you could just buy a condo in Miami? Now, you already have to be fairly well off to do so, and there are plenty of Argentinians that have come here and effectively used Brickell, Sunny Isles, Miami Beach as bank accounts. And let me tell you, they've paid far better than 4 or 5% interest a year, right? So now, at this point in the cycle, especially in the summer, we're getting emails, being on the list of Florida brokers. Hey, bring your buyers over. We are not paying 6%, we are paying 7%. Oh, but wait, there's more, like that guy who was on QVC, Peter. But wait, there's more. What was his name? It's not important.
That's the guy who died, right?
Yeah, he passed away.
Yeah.
He passed away.
Yeah.
Mike something?
Yeah.
But wait, there's more. But wait, you don't only get 7%. Let me tell you what your buyers get. Your buyers get 7% guaranteed yields for year one. And we're going to pay for the first year of maintenance fees, which
guaranteed return.
I don't. There's an asterisk in some very small font, like on boner pills. But this particular project, and I won't name names. Do your own research. But it's also an EB5 project, which I think is interesting. It's something we've spoken about in the past. We were talking about the gold card for that cost $5 million. For those of you who don't know, the EB5 visa program allows you in certain markets to effectively have a fast track to a green card for $850,000, and then in a market like Miami, the number is $1,050,000. $50,000 plus any associated fees they're going to charge you, which I sure as hell they will charge you. And then it's not like a fee, it's an investment. You're paying this money and you're getting a very, very low interest rate back, probably 1%, 2%, if that. But what you are getting is a fast track to your green card. Now, I don't know, Peter, maybe you've heard something about this. I don't know if are they still rolling projects like this out with all this talk of the $5 million Trump card? Because if so, it's a tremendous deal because A, it's 1/5 of the amount, and B, you do get the money back, albeit with a very low interest rate.
Yeah, it would be a great way to undercut the. I mean, talk about arbitrage. You want
Talk
to
about
find a backdoor
arbitrage.
way to kind of. Yeah, this would be tremendous. But you know, Daniel, like you said about this particular project, so the way I always looked at it is on the buy side, a broker representing a buyer, they're probably going to make 3 points on the purchase price on a resale, and they're going to make 5 points on new construction. Why? Because you have to convince, you as a broker, you need to convince somebody, let's
To buy
bet on
something
this
that doesn't
developer.
exist.
It doesn't exist. You're buying off of plans. You're buying off of beautiful, pretty people telling you how great it is. You're buying off of free booze and food that they give you at all the parties and they make you feel special. So if you're able to do that as a broker, you deserve more. You know, you're going to get 40% more. No, the 60% more on the commission. So yeah. So 3% resale existing, 5% was a normal. Now, depending on how markets go and whether a developer's struggling or not, my word struggling, they might say, well, you know, they got a particular unit that's unique, whatever. But they'll raise the commission in hopes that they're going to be able to attract or incentivize brokers to come in here. So typically, when you see the rates go up, that's a tell that the building isn't doing everything that they had anticipated. Sometimes they'll do like a short-term deal or something. So when I see it go from 5 to 7% on the commission side, that tells me that the thing is not selling, generally speaking, the way it should. And yeah, but you're like, well, Peter, how can they say that? Because there's no sheriff. Pre-construction, you say whatever the hell you want. You can say whatever you want. It's not like
70%.
it's not like
We're
Securities and
70%
Exchange
sold.
Commission. When somebody goes out there and talks shit, the SEC, well, they used to. I don't know if they're going to anymore, but when you go out there and talk shit, you know, if you try to front run the market, the SEC is going to hunt you down. In pre-construction, dude, good luck. You got 65 regulators trying to enforce 28,250 condo associations. Who the hell is going to run down all these pre-construction people? It's not going to happen. It never happens. It never, ever, ever happens. So the best thing you can do as a buyer is figure out what's going on. If you want pre-construction, look at the commission, look at what kind of incentives they're giving you. But a real telltale sign is look at the developer. If the developer's built before and they got a track record, it's kind of like a horse race. I always say it. When you go to the horse track, you don't have to be a horse person to know, but you bet the horse because it looks good. Oh, look at the design. You bet the number. Oh, I love this. This is my lucky number. This is my lucky name. Or you bet the jockey who knows how to ride the horse and get it over the finish line. So if you are looking at pre-construction, I would encourage you to go ahead and check out what the developer's doing. And the other thing I would tell you is if there's any kind of bank financing involved, a bank will come in and they will underwrite and they will take a look at what's really going on. And they're not going to tell you everything, but they're going to give you a seal of approval that a second set of eyes that isn't drinking the Kool-Aid and hustling and hawking stuff is going to be able to give you some sort of sense. So when I see these commissions, it either says they sold everything out and they got some unit overlooking the dumpster that nobody wants, which is always the one I want, because that one's probably going to make sense from an investment perspective, or they're struggling and people are up their ass and they're going to blow their schedule. And if they blow their schedule, it could be catastrophic, not only for the project, but also for all of the other investors are involved. So this to me is a tell. It's always, always, always a tell. Like when they start giving away, they're going to start giving away free cars if they haven't. Somebody will be offering a free car to a broker. If you go ahead and you bring somebody in,
you can get. I mean, it's going to cost you $65 million at the Aston Martin, but the Aston Martin penthouse, the triplex up there, they're giving a supercar away.
Nice.
It's a different price point, but
yeah.
same wave, right?
Yeah, 100%. So it is summer, so let's give the developer a benefit of the doubt. It's summer. They're trying to juice sales right now because nobody gives two shits about buying pre-construction. When we got Liberation Day going on, we got wars going on, we got all this type of stuff going on. but yet the developer still sort of needs to make progress. So let's give them benefit of doubt. Let's say they're trying to break up this summer of paralysis by analysis, and therefore they're going to jack up commissions, hoping that they can get some realtor who's able to go out there and hustle and bring this project to somebody's attention. I'm not saying the project's good or bad. I'm just saying it's a tell about how the sales are going.
Yeah, look, it's business. There's a lot
Yep.
of there's a lot of competition. Have you seen the cranes? There's a lot of buildings going on. I mean, if a developer is still offering 5% in July, then shit, they must be doing great, or they're delusional, because there are a lot of projects offering 6, 7, 8. Hell, 10 years ago, Related was offering 10% at Paraiso.
Yep, 100%, 10%. That's what it was. Yeah. And Daniel, to your point, I always say, you don't have to be an economist. Figure out what's going on in the economy. Watch the happy hours. Watch and see what kind of happy hours are going. Dude, I'm seeing some really interesting happy hours that are starting to pop up from some restaurants you would never, ever expect. So pay attention.
You saw the beach after their whole spring break. Get off the beach. We're gonna raise parking. It's a $1 parking on Miami Beach for the rest of the summer, because no one's going to Miami Beach.
Really?
$1 parking.
Oh, that's pretty good. That's great. No, pretty good. That's fantastic.
It's fantastic. I don't know if it's enough. It might be a little too late. Too little, too late. But
yeah.
Hey, you know what? It got him on the front page of the Herald for like 2 days, and it's got me talking about Miami Beach.
Yeah,
it's a little bit of a hike, but what the heck? I like going to Miami Beach. I don't like paying $40 for parking. But just to say I went to Miami Beach to pay $1 for parking. Are there new restaurants popping up?
But think about it now. With that dollar you save, you can get 2 of the $75 pina coladas or margaritas on Ocean Drive.
No. It's $75 pizza, and it has black truffle on it.
There we go. 100%.
All right. So you know what? You said it. Benefit of the doubt. I'm buying what the developers are selling. I want developers to succeed. I like progress. I just need them to do it right, because ultimately, if I bring a client to buy a pre-construction project, in a few years, they're going to want to sell that pre-construction project. And who's going to have to sell it? Me, right?
True.
And if it's not a marketable product, if it's not built well, that sucks. If the numbers don't work, for an investor today, it might not work for an investor in 5 years. Shit, it probably won't, because then it'll be a 5-year-old building or a 10-year-old building at that point.
And then you'll have a structural integrity reserve study and a special assessment.
But I'm buying it before we move on.
I would say buy with an asterisk, and my asterisk is, if you see a commission higher like that, I would go in there and try to negotiate, because developers are going to tell you they never negotiate. I will tell you, if you go through deeds, once a building comes online, the price discrepancy, the same floor, same line, it'll vary dramatically. That should suggest to you that, okay, this is a building that might want to be willing to negotiate. Let's go in there and see if we can kind of get a deal, assuming you believe in the developer, and the numbers potentially as they portray them are going to pencil out in the future.
All right, I'm buying. Peter's buying with an asterisk.
Yep.
So Genting is back. Well, they never.
But we
really
should
left.
tell people. But you got to tell people Genting who they are. Dude, the Malaysians.
Malaysians.
They own Norwegian Cruise Lines.
They own a lot of stuff. They're like Swire, but instead of owning an airline, they own a cruise line. Swire owns Cathay, right? So Genting Group is a $8 billion market cap, Singapore-based. They're development corporations based in Malaysia. They came here in 2000 and I wrote it down here somewhere. 2009, Terra actually bought the Miami Herald site, right? And they flipped it to Genting, right? Fact check me on that, Peter.
I don't know if Terra closed on it. They were under contract to buy it. I don't recall if they actually closed.
No, they flipped it. They flipped it to Mayfield Development. That's what they did.
Yeah. I think they had a.
And then Genting got it. Mayfield, what am I reading here? Extended the closing multiple times and eventually defaulted. Genting then got the property around 2011, 2012. They've been holding onto it with the hopes that the Destination Resorts bill, which was a bill that was trying to get pushed through Tallahassee for quite some time, much to the chagrin of the Seminoles, the Miccosukees, Disney, and the cruise lines, because that would have enabled Genting to open a casino on the former site of the Miami Herald newspaper. And the bill never got passed because you don't fuck with the mouse, as Ron DeSantis has learned. And I guess he just doesn't read history. It's just like, come on. But they're back in the news because after the whole destination resort bill, Boo Boffle failed, they said later Miami, they went to Bimini and built Resorts World Bimini, and they opened their casino there. I've actually never been. Have you been?
No, I haven't been. They're in Vegas too. Yep.
Yeah, they're all over the place. Multi-billion-dollar corporation, but they've been land banking that site at the Herald. And there was a rumor that David Martin had it under contract for like $1.2 billion about a year or so ago.
Yep.
That never happened. Yep. And so
no, he couldn't get the cash.
He couldn't get the cash.
Yeah, because he had it under contract. They made a big deal out of it. Yeah, I mean, $1.2 billion for dirt. What was it slated for? 6 towers or something?
Yeah,
1.2. I guess if
the
you divvy it
original
up that way,
renderings had like 6 towers. Now they pushed a proposal in for 3. They're all between about 600 to 700 feet. But the original project was a $3.8 billion with a B, 14-acre project. I remember seeing the renderings when they did it. They had what was going to be one of the largest convention floor spaces ever, because that was supposed to be the casino.
Yep.
And they said, well, if we wound up building this without the casino, we'll just turn it into a convention space. But that's not sexy, nor is it as wildly profitable as a casino, I'm sure. So they I guess they shelved it. Why they didn't just reignite the same plan, rekindle that same plan, probably because the economics in the market have changed. And they realized.
Yeah, I mean, think about online gambling now.
Online gambling, and I mean, I don't know if that neighborhood can absorb that many units for whatever they were selling. Was it 6 residential towers? It was probably a hotel, 2 residentials.
So the way it was before, and let me just put a disclaimer. I don't know what the current plan is, but let me tell you what it was before. So the Miami Herald site, what would you say? It's 13th, 12th, and 13th or so.
It's
ballpark streets off of Biscayne. It's east of Biscayne.
We can talk about it, or we can just pull it up. It's between 15th and the 395.
Yeah. But I think 13, because I start my tours there. I do a tour of Edgewater Midtown, walking tour. And we start them there at the Metro Mover station. The Adrian Arch Metro Mover station used to be called the Omni Metro Mover station. Yeah, there you go. I want to say it's like 13th or so.
You're right. It's between 13th and 15th.
Yep. Okay. So what was planned is 6 towers, and what they were going to do is they were going to build a pedestal. Typically, when you build a project down here, you go 8 stories pedestal. You put office, retail, townhouses on the front, studios. 8th floor, you got your common areas. That's where you got your swimming pools, stuff like that. Then you put up towers. So they were going to put it up where, and if you're looking at that description, I just want you to keep in mind that all of it couldn't be combined into one site. So if you're looking at the water, that would be to the east. So as you go to the west, where you start to see a high rise, and it's just north of the major highway. Yep, there you go. So all of that would be combined into one. Genting has all of that. But in addition, wait, there's more. Across the street, you're going to find the Omni. And they also had the Omni. So what the plan was, they were going to go ahead and build that 6-building complex, of which it was going to be 4 condo towers, 2 hotels. They were going to use the Omni Hotel. They were going to use that as a temporary facility while they went ahead and built it. And once they built what they had to do, they were either going to retrofit the existing Omni, which is a mall that's been closed forever, or they were going to knock it down and go ahead and go vertical with a variety of other things. And at the time that they wanted to do it, the Great Recession was hitting. And because the Great Recession was hitting, they thought they could push through something that was going to generate jobs, and the jobs would come from gambling. But then you had people like the former mayor of Miami, Manny Diaz, come out and say, listen, if you build casinos, that's all you're going to do is build a wall, much like Atlantic City, and you would cut off all the development that'd be going on to the west. So you had a lot of fighting going on back and forth. But I think, and what the plan was for Genting at the time, because they own Norwegian Cruise Lines, you'd fly into Miami International Airport or Lauderdale, you'd come over and you stay in the hotel, you spend a night or 2 in the hotel, then they'd shuttle you across to Norwegian Cruise Line, they'd send you out at sea, You could gamble while you were at the hotel. You could gamble in the cruise ship. You come back, you stay in the hotel, you gamble some more, you do some more shopping, and then they take you back to Miami International Airport. So they were going to soak you all the way along the way if you wanted. You could have like an
Every
all-inclusive
dollar
thing.
you spent was going, and that was the problem that I had with it. They're not even a local development company, so every
Yep.
dollar
Yep.
of revenue that went into their coffers, they're not putting any of that back into Miami. That's going
Yep.
to Timbuktu.
Yep. Probably Kuala
I
Lumpur.
do
Yep.
recognize that Timbuktu is an actual place, and
Yep.
Genting has nothing to do with it, but
Yep.
it's just a euphemism for very far away.
Yes. So that was the original plan. I think Genting is stuck with it. They don't know what the hell they're going to do with it. They don't like what's coming down the pike in terms of the economy. They don't know what the uncertainty is, which will be our next story, talking about whether a gentleman with a lot of money is actually going to do what he said he's going to do and build an office tower. So I think these people are stuck with it. They're trying to revive interest, and they're trying to figure out what do we do for the foreseeable future, because all of the tea leaves right now are sort of saying, let's just sit on the sidelines. And based on the valuation of that dirt, if it is worth 1.2 billion, and if they're banging them at 2% property tax, you have a calculator? Why don't you run those numbers real quick? What the property tax on this vacant dirt? I mean, maybe they should bring in some cows, Daniel. Bring in some cows, so when the state of Florida sends over the airplane that takes photos of the land that's claimed for agriculture, so you get a reduced property tax. I mean, maybe that's what they should do. Why don't they turn into agriculture? Why don't they set up a church on that site? Set up a church, set it up so you don't have to pay the property taxes. But dude, $1.2 billion is, I think, what David Martin had
That's
on
what
the
David
contract.
Martin was going to buy it for, 1.225, I think.
Okay, yeah.
Once you get over $1 billion, what's another 25 million?
Yeah, exactly. But run the numbers on that. 1.2 billion. Can you run the numbers? Do you have a calculator handy?
Yeah, let me run the numbers on it.
All right, 1.2 billion times 2%. I want to see what the carry is on that dirt, because they're not generating any cash whatsoever.
24 million a year.
Nothing. How much?
24 million a year, but that's not what they're paying in taxes. That was what David Martin was going to wind up paying.
Yeah, David Martin.
Their carry on it, I think their cost base is like 190 million. So say it's gone up 10% a year, because you think they homesteaded it?
But dude, with the valuations, what's happened with Casa Bella or whatever they're calling it across the street that Related's putting up, the one that they tried to do and failed, they couldn't get it off the ground, Auberge last time. Now they're replacing it with something else. They put a new name. It's the same freaking design. It was the same everything. That land has gone up significantly, and
it's gone up significantly, but they can only push the assessed value 10% a year for the last 10 years. So say under.
I don't know what it is on commercial. I don't know how they do it, and I don't know what Tomas Regalado, the property appraiser, who I have no idea.
So what do you think they're paying off a basis of $500 million a year?
Dude, the thing I know. The thing I know is they are like the developers that I keep telling you about, where you come here, it's not about how much money you make on your first project, it's about how much you leave with. And I think they're trying to figure out a way to either sell the dirt, JV the dirt, or do something. Because if you're looking at the forecast and you're looking at these pricing, and if I'm right on my 40%, which by the way might be low in terms of a price pullback, dude, what are you going to do with this land? Oh, 1,000 people a day and gateway to Latin America, blah, 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 blah. We put up a shit ton of condos. We put up a shit ton of rentals. Who exactly are you going to sell this to? Now, ultimately, it'll be tremendous. But did they miss the window twice? That's the question. That's the real question. And there's a cost associated with carrying this damn thing. And if David Martin, who's basically trying to build everything everywhere, if he can't get money to put this deal together while the market's still on the upswing, what the hell's Genting doing? Somebody in Kuala Lumpur is like, dude, what the hell are we doing with this? I thought we owned cruise ships. We got a resort in Bimini. The damn thing in Bimini we're probably banking on, and we got this dirt. We got this cash tied up. And the dollar, by the way, is weakening. So we don't even got the currency bump going anymore because the dollar's pulling back. So, I mean, just think about it big picture wise. What about Swire? Swire, Steve Owens retired. Steve Owens is the guy who really kind of put Swire on the map, Hong Kong based. And Genting is Malaysia. So they replaced the leadership. And what does the guy do? The guy's dumping everything. He dumped the Brickell City Center. He dumped the dirt where they were going to put up one Brickell City Center, and supposedly he's going to use it all to build this Mandarin. Let's see if that thing gets off the ground. Let's see if that actually goes forward. So I'm just saying, you got to be wondering, why is it making headlines? And more importantly, what do you do with it? Dirt is great when the market's going up. When it's not going up, it's going down.
And
It almost becomes a depreciating asset.
it's a lot of dirt, Peter. It's not the Aston Martin 50,000 square foot site where you can just throw something up and hope for the best. It's acres and acres and acres. I don't even think I think
Remember, they
Bezos
had
might
the
have 10
Omni,
acres on the bay.
Daniel, they had the Omni across.
No, the
What the hell
whole
is that
site,
thing
the
generating?
whole thing was 14 acres. I think the Miami Herald site alone has got to be 10 acres.
What is it costing at the Omni? Omni's this old mall that was built. It's obsolete. It's whatever. Chamber of Commerce used to be located there. They might still be located there. They have like some private school for design or something. They got a hotel, Radisson or something up at the top. Dude, what is the cost on that thing? It's an entire city block. And
You know what?
what kind of cash is thrown off?
Next week we're doing Omni and we're doing Bayside. What the f?
Yeah. Yeah.
But we're
So
out of time.
I'm telling you, margin call. It's a margin call related to that, and that's why they're making headlines, because they need to somehow they need to get people hot and bothered. They need to chum the water. So I would say that is a sell.
Sell. Yeah, I think that goes without saying. And this brings us to our last topic, the best topic. He's big, he's bad. He came here from Chicago, but he's actually from South Florida. You know that, right?
Oh, I didn't know that.
Yeah, he's from South Florida. Ken Griffin, or as we like to call him on this show, Ken Billions, because he's got so many of them. What's new with his office tower? Not much from the outside, but maybe there's something new that you know that I don't, Peter. What's going on?
So Ken Griffin comes to town. He is he's a billionaire, made a lot of money. He's got a hedge fund called Citadel. He's actually featured in a movie. His character is featured in a movie called Dumb Money. I'd encourage everybody to check it out. It's pretty interesting. So doing very well. Came down here, invested. Some say he came down here to build a business. Others say he came down here like everybody does, as they get long in the tooth, and they simply come down here to retire. So it's one or the other. You can kind of take it, make of it what you want. But he buys this site, which at one point was supposed to be a condo tower, right at Coral Way or 13th, and effectively the bay. So think Brickell Avenue and Coral Way. Right where it ends, there's a piece of dirt there. He's going to put up a $1 billion office tower. There's been a lot of talk about how Miami, and because he made the comment, Miami's going to surpass New York as a financial capital of the United States, possibly even the world. All this has been going on. We've been hearing about all these great things. He's donating cash to all kinds of organizations. He's giving it to the arts. He's giving this and that, which is all tremendous. But I've said from the beginning, this thing is never going to get off the ground. It doesn't make any sense. This is the typical case where somebody comes in from out of town. They come in during an upcycle. They overpay. They have huge plans, i.e. Genting, to do all kinds of stuff. And at the end of the day, they never get it over the finish line. So the reason it comes up today is we have now entered the third quarter. And according to Mr. Griffin and all the stories, and just recently in Bloomberg did a whole interview with him. They parachuted some people in to interview him. He's supposed to break ground in third quarter of this year. I call that he will not do it. He's not going to make it happen. It's not going to happen. Why? Because a whole variety of different issues, primarily economic issues, especially if you're going to build a $1 billion office tower. What's it going to cost you on the construction side? How do you factor that in with the tariffs? I've mentioned previously, probably within the last 90 days.
1.7 million square feet of office space he's got to fill up too, by the way.
One point, yeah, you can see that site nicely. That was supposed to be a condo. That was actually at one point, it was going to be a Brazilian developer who was going to put on it. They couldn't do it. Tibor Hollow ends up with it. He dumps it to Ken Griffin. So Ken Griffin's got this site. It's going to be a $1 billion office tower. And people have bought in and around there in speculation. They're buying condos thinking, okay, if somebody's going to live in there, they can, you got the unit, you got the proximity, you can walk to work, all this type of stuff. So
by the
all
way,
kinds of speculation.
The Jade is a fantastic building. It's this building right here to, well, if we're looking at it from the water to the left, so to the south of that site. That was Edgardo's first project, right?
Yeah, he built it with Swire because he didn't have any experience.
So he built it with trades Swire. Well. But if that building's going up and you're on the north side of that building, give me a call. And I'm saying give me a call because Peter hates selling condos. He only likes buying them. because that's going to be a dusty balcony for
Exactly.
the next 5 years.
And you're going to get plenty of flat tires. You
Yeah,
always know whenever they
yeah,
do new
you
construction,
always
you got
know.
plenty of flat tires, and also too, you're also going to have if you live in the building to the north called the Mark, or even to the south called the Jade, you're going to have a lot of pigeons. For some reason, every time there's new construction, the pigeons show up on everybody's balcony that neighbors. Just a
Well,
little
because they're eating all
tidbit.
the food that all these construction workers are throwing away. It's got to be what it is.
Whatever it is, you could be on the 8th floor and you got pigeons on your balcony suddenly because there's new construction.
But I'm
So
sorry,
basically,
I cut you off,
yep.
Peter.
So this is going to be effectively the capital of Citadel. This is where their headquarters is going to be. Remember, they moved out of Chicago, really well respected, well known cash machine. They're supposed to break ground in the third quarter based on all the press reports and all the hoopla and all the bending of the knees that locals are doing to Mr. Griffin. And it's Q3. So I intend for the next 12 weeks until we get to Q4 to talk about have they broken ground, because this is when they were supposed to break ground. So it's not a big deal, but yet, a call was made. Hoopla was put out there. We will surpass New York City, and this will be the symbol of us surpassing New York City as the financial capital of the United States. And we are now 1 week into it. We're beginning our first week. Let's actually see if they put a shovel in the ground in Q3 of this year as called. My money is sell. They're not going to do it. Not anytime soon for a variety of different reasons. And based on the previous story with Genting, I would say that only bolsters my bearishness on this
But
project going forward
and
anytime soon.
this is where we butt heads, I think, a little bit, Peter. Is
Yep.
he's not Swire, he's not Steve Ross, he's not Genting, he doesn't own cruise lines or any that I know of, at least. And him personally is worth 50 something billion dollars. So what does it matter whether he builds it or not? If anything, it's just a vanity project. He could build it. He could then blow it up the next day. He could cover it in Christmas lights. Well, actually, the city of Miami won't let him do it. They'll let him do whatever he wants. What am I talking about? But he can effectively lose every penny he puts into it. And so what? It's not his business. He's making $1 billion in cash a minute. If it's bad business, who cares? He wants it.
I'm not. Listen, the business side, I know the numbers will work because they got some. I'm told very intelligent people working on them. What I'm focused on is just like when Bitcoin came during the pandemic, just like we had the crypto bros, we were all sold on this concept, all this excitement, all the people who came down here and bought into the concept. Oh my God, you got Ken Billions. I keep saying you got Ken Griffin putting up $1 billion office tower.
Well.
You got Bitcoin. We're going to be the capital of Bitcoin and crypto. So all these people were basically sold on what was going to lead us to the next level. We were going to be the capital of crypto. We're going to place Wall Street as the capital. A lot of people went in. They swallowed the hook like they always do every single time. And
we sell a very compelling product.
It's very compelling. I mean, listen, dude, crypto. We had FTX, Sam Bankman-Fried. He's now in prison. His signage was on what was at one point the American Airlines Arena, the Miami Heat.
They only took it off like 6 months ago too. You know that.
But yeah, but this is my point. We sell people on this stuff, and then lo and behold, when it all goes bad, it's like, dude, it's a tough break. Well, Ken Griffin announced Q3 2025. He's going vertical, like you said. He's got all the money in the world. He doesn't care about economic conditions. So, Mr. Griffin, with all due respect, you talked a lot. Put a shovel in the ground. Let's see you actually do what you say you're going to do. Otherwise, I'm going to put you in the list with everybody else who always talks shit about doing all this great stuff. And at the end of the day, they don't get it over the finish line.
I hope he does. I
do too.
I want him to. We are, listen, everybody watching, we got nobody watching. We had Peter, this is and not to interject and not to diverge too much from this, but this is the best show we've had. We had some concurrent viewers. We had 13 total views live, and we're gonna get more. But Peter and I are fans of progress. We love the city. We love the people that work in it. We want there to be more housing. We want developers to do more projects. They need to do it the right way for their own businesses. So if it doesn't work for Swire and Swire wants to pull out, Swire's going to pull out. If it doesn't work for David Martin's not going to do it because they are good businessmen. Now, Ken Griffin, the market has rewarded him very, very fairly for his good business instincts. And he is not a developer. So
Oh,
maybe
again, has nothing to do with that.
he's
You
he's
know,
the he's the what's the word I'm looking for? I'm lost for my words. He's the little kid in a candy store with all of dad's money, but he's also dad. Uh, and this is what he wants. So I want him to do it just like you. Put the shovel in the ground, Ken Billions. Just do it. What's the worst that can happen? You lose $1 billion? You still got the jet or the hangar full of jets. You still got the boat. And put your name on it. You know what? I think you should call it Ken Griffin Tower.
yeah, Ken Griffin Tower.
KGT. KGT.
Yeah.
Boom.
KGT, exactly. And again,
I'll even stop bugging you for wanting to move that house you bought in Vizcaya to Overtown, which is ridiculous. But we can talk about that.
exactly. So again, I wish him success. I want him to do it. The only thing I'm saying is if this community, if you are going to peddle concepts to people who will then take action because they're very aggressive and try to hold a position, i.e., buy a condo or something like that, and then when you don't get it over the finish line after all the hoopla,
No,
there's not enough pushback.
Yeah, we need doers. We
Yeah.
need Ken. Really, I'd like Ken to just build the freaking tower, be
Why does he buy
successful at it. I
Genting
hope he
too?
is. Yeah,
Dude, buy out
Genting. Yeah,
Genting.
build it. I mean, don't build a fucking casino in my community because I will get loud. But I don't need to worry about that because the mouse is still there. Universal just opened another
Yep.
amusement park up there. They don't want people coming to Florida to gamble. They want people to come here and buy $10 pretzels in their roller coaster park, and that's fine. What I'm very hopeful for is that Ken Griffin comes here and he stays here and he spends money here because he's got it. It's real. It's not Medicare fraud money. It's real money. And if he's here and his people are here, they'll spend it here. They'll buy houses. They'll spend money at restaurants. They'll send their kids to schools if they can get in, if there are any schools for their kids to go to. But that's a whole nother episode.
But if he is going to stay, if he says he's going to do something, do it.
Do it.
Because understand, putting out that kind of message is going to prompt people to go ahead and make financial decisions. Now, you don't think so, Mr. Griffin, because you're putting up an office tower, but I guarantee people are speculating in and around because of this, and I guarantee people in the real estate industry have sold buyers on this concept. So if you say you're going to do it, do it. That's all I say. And my bet is, based on economic conditions, based on some of his quotes, he's not putting a shovel in the ground in Q3. And if he doesn't put a shovel in the ground, my recommendation would be, if you want to stick around and have credibility, tell people why you're not putting a shovel in the ground. And people will be like, fine, we get it.
By the way, people will say, okay, that's a shrewd business decision, shrewd businessman.
Makes sense. Yeah,
Land
100%.
bank it, pay the carry, and sell it to Genting so they can't build anything on it.
And bring some transparency because Dan, you know what kills the market? What kills the market is a lack of transparency. If there's transparency, people will make an educated decision going in.
And you move forward.
Yeah, of course. So that's all I'm saying. But I've been hearing about this Wall Street South forever and ever, since he took down the site in 2022 when they announced it. We're 3 years into this, 2.5 years into it. So if you're going to do it, put a shovel on the ground. Otherwise, just be like, dude, I messed up. I overpaid. Now I don't know what the hell I'm going to do with the dirt, just like everybody's done since, for 20 years. Oh, and by the way, the Jade, that should be coming up on 20 years real soon, if it hasn't already. So that means milestone inspections at 30.
What are they, 04? Are they an 04 building?
Probably like 04, 05. Yeah. So now they're hitting the peak of the bell curve.
No, Jade.
Funny story on that building. I don't know if I ever told you. I did an interview with 60 Minutes, Scott Pelley, and this was during the Great Recession. So we went in there. And dude, there were so many foreclosures you would not believe it. Oh yeah, there's so many foreclosures. The FBI basically, they could have set up a branch office in there. There was so much fraud going on in that building. It was exceptional. Anybody want to see that video? Look me up on YouTube, and I think I got a clip up there or a link to the piece back in the day.
I actually saw. I was thinking about putting this in the rundown, and we can save it for next week. But and I'll just drop it for a second. FBI reported that there's a surge in quick claim fraud. So people trying to sell properties that are not theirs.
Yeah, yeah. That always it seems like it's just part of the typical cycle to me. I've been hearing about that for decades.
So before we say our au
Oh, I
revoirs
do have a
and
surprise. I do have a
oh
surprise. So you
oh
tell
he's
me
got it.
when. But I have to go off screen so I can come back on screen with a big surprise.
All right,
Should
but
I
tell
do it
me
now
first
or what?
if you're if tell let's buy sell hold on Ken Billions.
I'm a sell. He's not putting a shovel in the ground Q3.
You
I've been
you
out
still don't think
publicly.
he's
I'm going to
doing it?
continue.
You're selling. But I'm treading water on his dream. I haven't made up my mind about it.
All right. Well, listen, I'm always, I tend to be an outlier.
All right,
All right.
we're
Can I
holding.
show you my surprise?
We can't come to a consensus on it. We'll hold, but I want it noted for the record that Peter is a hard sell on KGT. So all
In
right, go off
Q3.
screen
Remember,
in
Q3. Okay, I'm
Q3.
coming off screen. You're going to love this.
All right, I'm gonna sit here and twiddle my thumbs for. We have no viewers. What is
That's
he
fine.
doing? What did he bring me
That's fine.
back from his trip? Did he bring me back something from his
Are
trip?
you ready?
Okay,
Let me
you got a puppy.
show this off to
Wait, you got a
you.
puppy?
This is, here we go.
What do we do? Is that for
So,
cricket?
this is the team owned by Sachi Madella from
For
Microsoft.
Microsoft.
This is his cricket team. It's called the Seattle Orcas. Saw them
This
last night.
it's this weekend, right?
Yeah. I was out there last night. It goes till Sunday. And then this is a team from San Francisco called the Unicorns. So I saw Seattle versus San Francisco last night over at the Broward Cricket Ground. Dude, let me tell you the experience. Wow, tremendous. 15
Was it
bucks in.
awesome?
Tremendous. 15 bucks in, $20 to park. It's right there in Lauderhill, 441 in Sunrise.
That's like Miami Beach parking 3 months ago.
Yeah, well, when the West Indies play, I always go for West Indies matches. This is like their home field, one of their home fields for the Caribbean team. So the players who were there, some of the best in the world. No Indian players. Indian players, not to get too much, but Indian players are really well known. But no Indian players, but some of the best in the world that were playing. 15 bucks to get in, $20 for that. And because the World Cup was here last year in Broward County at the stadium, they really gussied it up. Dude, this place used to be like a park, like going to a park. Like, I don't know, maybe you would go see football at Tropical Park or somewhere, just
Yeah.
some regular park. And now all of a sudden it's like a freaking stadium. It was like unbelievable the amount of money put in, the vibe they put in there. The whole thing
How's the
was top
food?
notch. They brought in a bunch of food trucks, Jamaican and Trini and stuff like that. Yeah. But well, the only thing I tried to get a patty, $5 a patty. Okay, that's fair. $3.50 Apple Pay surcharge. I was like, $8.50 for a patty? Are you kidding me? But the
You can get
cricket,
two.
outstanding. And those are two of the teams. And by the way, those flags or banners or whatever you want to call them, they give it out for free. They're giving you all kinds of free stuff because they're trying to create the brands just top notch across the board. I think it's run by like Brits or something. So the way they've organized it all, it's all just top notch. So anybody who's in South Florida this week, I would encourage you, go check out a match. They're playing tonight again. They're going to play tonight being Wednesday. They're going to play again on Thursday. And then they have double headers on Friday, Saturday, Sunday. Cost you 15 bucks to get in. You'll have an excellent
What
time.
time?
There's all kinds of
Tell
entertainment.
everybody what time of the match is on Saturday.
So the matches typically last 3 hours. So first match starts at 3. Second match will start at 7. If you're going, buy the cheap ticket for 15 bucks. It's kind of like going to a Marlins game. Nobody's going to enforce anything. So you could pay 200 bucks for a ticket, buy the $15 ticket, and then go and wander wherever you want, which is what I do. And there's areas, the way they do pricing at cricket is if you're covered, you don't have the sun beating down on you, they charge a premium. So like a $15 ticket should be sitting out there with fully sun exposed. I can tell you firsthand, just go. But the weekend, you're going to get crowds because you have a lot of teams. If you're wondering like which team to go for or something like that, there's a New York team. There's a Los Angeles team. There's a Seattle team, San
And
Francisco
you were
team,
telling me that
Washington.
it's all owned by like Indian tech executives.
Yeah. Three of the teams. Yeah. It's all owned by. They have the Indian Premier League, which is like that's why cricket's the second most watched sport in the world after soccer, because I mean
That is
India is
so
1.4
cool.
billion, whatever. Yeah,
See, we're not just
but
about
so
real
three
estate here. We're cultural South Florida. We can talk about it all,
exactly.
but we do like real estate very much.
But it should open up your eyes, because if you go there and you see this facility that they've built, and there will be expansion of Major League Cricket, so they are talking about a South Florida team. The guy who runs Major League Cricket now is a brand new CEO. He came in from running the West Indies, so he's very adamant about bringing in South Florida. But the reason I bring that up is in and around the Lauderhill area, it's almost like you see this stadium and you think, okay, expansion, whatever. But then you look at these old ass condos. Yeah, I think it will revive some new life into the Lauderhill area, which I by the way love for the food and other reasons. But it's just, if you've never been to Lauderhill, this gives you a reason to go there, explore, and you might actually find yourself finding some pretty good real estate situations, opportunities, if you will. But put it on your map, because there's a lot going on there, and the cricket is really going to be a driving force for that area. Now, not everybody's a cricket fan, but I'll tell you, the sport, it's got like a timeline. It's got so many pitches. Think of it this way. This is an easy way to think of cricket. It's baseball with no foul balls and a pitch count. That's it. That's all it is. You'll love it. It's exciting as can be, and it's top-notch run. So I'd encourage everybody to go check it out while they're here, and then they'll probably be back again next year.
All right, you heard it from Peter. Where's Peter? Peter's over here, right there, right there. All right. Well, guys, everybody, thank you so much for joining us. My name is Daniel Hernandez. I'm a realtor with Compass, joined here with my partner in crime, Peter Zalewski of Miami Condo Club. And this is Buy, Sell, Hold Miami. We hope to see you next Friday. We're back to regularly scheduled programming. Wow, I think I'm having a stroke. Regularly scheduled programming every Friday at 4 p.m. And thanks for joining.